All right, we are live.
Laura, you were saying that you moved to Southern California in October.
Yes, in October 2024.
So you missed the Del Mar racing season?
You know what? I was here for it, but I did not attend it. But we got to kind of drive through and see some of the fanfare associated with it. Did you go?
No, I think I've been to two horse races my entire life. One was in Bay Meadows. Uh, I'm sorry, not Bay Meadows, Golden Gate Fields, which is in kind of the Berkeley, Oakland area, East Bay, with just a wonderful view looking right at the Golden Gate Bridge. But the first time I went to a horse race was at the Del Mar track. And all those horses just look magnificent, right? I knew nothing about betting on any of them. I know nothing now about betting on them, but they look like just great animals. So
Yes. Yeah, I am not
yeah,
a bettor myself, but I know traffic picked up quite a bit during that time, that's for sure. So I think it attracted quite a few people to the area.
Yeah, I'm the exact. My only interest in horses is just simply the gambling aspect of it. So,
How can you possibly bet on something that's so entirely out of your control? I mean, are you one of these guys with the funny hats, with the betting tickets stuck in them, with a cigar hanging out your mouth, like looking at their teeth before the race?
no, I live like 15 minutes away from here, two fairly prominent horse tracks here in Northeast Ohio. So my whole life I've been going sparingly. I'm far from any expert, but I mean, most gambling is, out of your control. I'm just an action junkie. I love action. I love putting some money down and the thrill of the chase. So I wish, I wouldn't have had that approach on the Super Bowl last Sunday because it was definitely a financial loser for me for sure. So, but the Chiefs finally failed me in a big way. So go Birds. Yes, I expect all the congratulations to Philly, my good friend Mike Hano, and many other Philly, Mel Colton, another Philly fan in my professional life. And yeah, absolutely. So I am happy. As I said last week, like all things being equal, I would have rather seen Philly win, but I got to cheer for who I'm betting on, right?
I don't know. Do you? Robbie tells me, and by the way, Laura, Robbie has actually interviewed Victor for his podcast, which is why,
Wonderful.
and I'm sure we're going to spend 20 or 30 minutes just talking about him and his personality and his hopes and his dreams on this show. Uh, but the he tells me never bet with your heart, or never bet how you hope something is going to turn out. If you're going to bet,
Unless you're a Buckeye fan, that was very profitable for me this year.
okay, good, good, all right.
All right, well, let's go ahead and get into it. This is The Big Picture. I'm Rich Swerbinsky with Onward and Upward Consulting, joined as always by my esteemed colleague and co-host, Rob Chrisman. Rob, great to see you. Where are you today? It's a fake background, so we got to get the real skinny on where you are.
I don't want to say where I am for real, but I want you, Rich. We are very thankful for Depth PR to be sponsoring this show. And Rich, I want you to say depth. Sorry, not Depth PR, depth. Rich, I want you to say depth without saying depth.
They like that, the extra emphasis. Our great friends and
Okay.
partners at
All right.
Depth.
Fair enough. All right.
20 years of ably servicing the mortgage industry, PR, brand management, strategic communication. The show is presented by them, and yeah, very grateful for our friends and partners at Depth. So
I would be hard pressed if ever. I don't know if I've ever found anybody who hasn't liked working with Depth. So that says a lot. Normally companies make enemies out there, and I haven't heard of any. So
very, very high
that,
approval rating. I can attest 8 years of great partnership at the Mortgage Collaborative. with depth. Yeah, a lot of our members, engage with them, and universally positive experience and feedback. I would agree. So good
Yeah.
stuff. And this week, very, very pleased to be joined by our special guest is Rate. It's still the one word company name, Rate. I still can't, it still sounds a little weird to me. Guaranteed rate, whatever you want to use. It's rates.
What I don't what how G rate, how long did G rate last? Does anybody call it G rate still, Laura?
We still see it every now and again, but we have rebranded. We are now Rate. But we
So
still see it lingering every now and again, the G
The,
rate.
yeah, Rich, to your point, I mean, these one word company names like Better
depth,
or well,
depth.
I'm okay with depth, but Rate or give me a few minutes and I'll think of some other one word company that doesn't quite, it's, I say it haltingly.
Hmm.
But anyway, all right. So you've definitely settled on Rate and you're not going to change to R at some point in the future, just guaranteed rate to G rate to R.
As far as
Actually,
I
you can't.
have been briefed, we are Rate, and Rate is here to stay.
Okay, good.
And our guest, it's Rates Senior Vice President of Enterprise Risk and Internal Audit, Laura Schmidt. Laura, thank you so much for joining us this week on The Big Picture.
Happy to be here. Thank you for having me.
All right. So excited to get into it. And as
I'm gonna
always,
I'm gonna get into it first.
okay.
Laura, you ready?
I'm ready.
What are you in charge of exactly?
So we are primarily my team does internal audit. So it's a bit of an integrated risk and audit role, but we oversee the internal audit function. So when you think of a three-line of defense model with respect to our three lines of defense of risk, internal audit is really that third line of defense. So your first line of defense is the front line roles like sales and processing and underwriting. Second line of defense is typically the monitoring and the governance roles, so things like compliance and quality control. And then third line of defense is that independent internal audit function. So we are internal audit in which we provide independent and objective assurance and consulting and advisory services for the company.
So I'm gonna go back many years. When I was a little kid, one time I was playing on the playground, and we were all sitting around in a circle playing mumbly peg or whatever we were doing, and we kind of went around the group there on the playground, and Johnny, what do you want to be? I want to be an astronaut. Susie, what do you want to be? I want to be a mom. Frank, what do you want to be? I want to play basketball. We came to the last person, and Francois said, I want to go into internal risk. And none of us knew what that was. Francois obviously had the inside track on what career paths might happen for him later in life. What did you do after high school that brought you to where you are today?
Is that a true story?
Of course not.
I'm still trying to figure out how there were astronauts when you were a kid.
Yeah, no kidding. So yeah.
John Glenn, that was, I mean,
it was two words. It was astronaut. And then, sometime in the 1940s, they combined them, Rich. So anyway, but when I was a kid, yeah, it was two words. Anyway, go on.
No, it's a great question. It was you could say it was not a direct path, right? Of course, I think as many auditors that I know in my field. So out of high school, so I was working in college. Throughout college, I had gotten into banking. I was working as a bank teller throughout college, and so that just kind of got me into the financial services industry as a first step, and then eventually started working in a compliance department of another lender, a wonderful lender, as a licensing and policy kind of in an assistant role. And then spent many years working in compliance from there. And that kind of opened up doors to more opportunities and eventually landed in internal audit. So it was not a direct path by any means. But I will say my 4-year-old recently asked me what I do for work. And when I told her, she said that's what she wanted to do. So I was very proud as a parent in that moment. So she's the next Francois, perhaps.
Nice. Yes, Francois. Yeah, if I had a box of tissues here, Rich, I would be dabbing my eyes right now after that sling. Anyway,
Your heckler, as always, in the Q&A early, saying the worst possible thing you can do is name your company after your last name, Chrisman LLC, the heckler notes. So,
yeah.
it's a spin on the rate company name decision. But as always, the heckler chiming in early. But let's get to more pertinent matters because we had a lot of news this week. I mean, some big news, of course, the CFPB, basically shut down late last week and closed for this week. And what to come next, still not entirely sure. They can't be eliminated without Congress, but I think we're in the midst of seeing the CFPB kind of neutered. It would be, I think, a fair statement. And then this week,
Congress, Rich I don't even know if Congress is in session. Are they doing anything right now? I'm sorry, I went down the wrong path there. Go ahead. Keep going.
And then, of course, the inflationary news this week, your boy Jerome Powell. I'm wondering if maybe you're starting to, come to my side of this conversation about Mr. Powell and lose a little faith maybe in Jay Powell. The CPI up 0.5% in January, 3% year over year. Core CPI up 3.3% year over year. And it just seems like, Rob, the Fed, they're losing the battle against inflation is the way it feels to me. I know you feel a little bit different. So as always, I'll throw that out of you and see which way you take it here.
Even if I didn't feel different, Rich, I feel obligated to represent those who do. The underserved, the consumer, as it were, in sorry, Laura, we're digressing here right before your very eyes. But I don't know if it's I can make the argument that the Fed can only do so much, and we seem to put reliance. And just for Laura, for your information, since you're obviously have only been in this business a few years, long time ago, the we used to watch Money Supply, for example. Thursday afternoons, it would come out. So that would move the markets. And then we moved to unemployment, the unemployment data that comes out on the first Friday of every month. So that would move markets, and it still does to some extent. But over the last several years, the focus has been on what is the Fed going to do? What is the Fed going to do? And oh my gosh, the Fed is come out and said the Federal Reserve wants to fight inflation rate. The Fed says, inflation rate of 2% or 2.5% or whatever percent they put out there as a target. And I continue to make the argument, Rich, that the Fed only has so much control over the inflation rate. The Fed can't control a drought in Ghana impacting the price of cocoa. It can't impact the price of wheat if there's a drought in Kansas. It can't impact the price of chips coming from China. And now we have all this tariff talk, which when you put a tariff of 25% on steel and aluminum, or you put a worldwide tariff on whatever, somebody has to pay that price. And it's
But none of that's in to be fair, none of that is in the current numbers or any of these.
That's true.
None of it. I mean,
let me finish. Let me finish.
Mhm.
So that aside, we can expect, I would think, inflation to actually pick up in future months based on what's going on now. And you will have economists saying, well, even if you put a tariff on, February 13th, well, it's going to take a month or two to start being felt in the system. And I understand that. So we're left with looking back and what was going on in October, November, December, and January. And even back then, there were inflationary pressures that I feel are outside the Federal Reserve's control. The cost of my flipping homeowners insurance, is like, holy smokes. And even Jerome Powell mentioned that yesterday, that certain housing markets are going to become unaffordable as time goes on because of homeowners insurance. That the Federal Reserve obviously doesn't control homeowners insurance costs, nor is that controlled at the federal level. I think that the Federal Reserve does what it can to to deal with inflation. Now, if you have a president, for example, that keeps talking about lowering rates, well, if I am a company thinking about expanding, or I'm a consumer thinking about buying a new refrigerator or a new wardrobe, and I have a very low credit card rate that I'm going to be putting my new wardrobe on, that's going to perhaps motivate me to buy more clothes. The Federal Reserve can't necessarily control what Nordstrom's or Macy's charges, or J.C. Penney's or Kmart. Does Kmart even still exist? Anyway, the credit card rates have obviously crept up, and a big chunk of our business comes from refinances now. Interestingly enough, about 40% of current applications come from people trying to pay off that expensive credit card debt. But we keep looking to the Federal Reserve to really, please, Jerome, lower inflation, please, please. Well, I think they can only do so much. And if you really want to, I receive emails every day. When will the Federal Reserve start buying Treasury securities and mortgage-backed securities in order to drive those prices up and rates down? And I write back and I say, I don't see the Federal Reserve actively stepping in and buying anything. And in fact, in order to combat inflation, you actually want rates to creep up so people won't go out and buy wardrobes, and companies who are thinking about expanding, it's too expensive for them to borrow money to build that, chip plant outside of Austin, Texas, so they don't build that chip plant. I don't think we want the Federal Reserve doing anything at this point. I think they made it clear they're going to wait and see what happens. And there's a lot going on. There's a lot of headline risk, once again, in the news with regard to the administration and what it's doing. But I think the Fed is just going to sit. And yeah, you could say, well, the Federal Reserve is losing the fight against inflation. Well, how would they win it? Should they raise rates?
I don't think they should raise rates right now, but I think the way they've managed it to this point has been abysmal, honestly, starting with 6 months of inflation as transitory that put us down this path and this mess when it was obvious that even people like me, like, this is real. And, and inflation is still increasing at 3.5% annually. That's not even factoring in all the inflation we've had the last 3 years. I would argue we need deflation right now, not just to get to 2% inflation, because we've suffered so much as a country with price increases these last 3 years because of mismanagement of it, in my perspective. I think they're using stale data. I think that they're like trying to run the wishbone in like a 2025 NFL season. It just seems to me like, for example, like when you hear, we've heard them both speak about interest rates ad nauseum as of late. Like when you hear Scott Bessent talk about the ways to bring down more interest rates in general, and Powell, who gives you more confidence?
I'm going to stick with my boy.
Okay. All right. I mean,
Yeah.
no.
Let's put it differently. Let me ask you, Rich. I'm going to put you on your heels here a little
Yeah.
bit. And Laura, I'm sorry if you're watching Mom and Dad bicker here.
We're going to get to Laura in a
great.
moment, I promise. Yeah.
Bear with us here. But Rich, within the last week, President Trump announced that he thinks that rates should be lower, or he's going to bring down interest rates. Do you think that would be a positive for our economy and a positive for the fight against inflation?
Well, he can't do anything. Of course, with Trump, you have to take everything with a grain of salt. I mean, if you're just going to take anything he says at face value, that's, a losing game, because he's just speaking in so many bombastic generalities that are kind of removed from truth. But when I hear Scott Bessent talk about lowering rates, I hear him talking about focusing on lowering the long end of the yield curve, the 5 and the 10-year Treasury, doing that through cutting of regulation, cutting of taxes, and most importantly, expansion of domestic energy use, which is at the underlying core of really all prices of everything. So, when I hear Bessent talk about it, it seems to make a lot of sense to me. When I hear Powell talk, nothing makes sense. It's the same flip-flop gobbledygook We got to raise rates. We got to lower rates. Now we're going to hold the fort. Looking at data from 3 months ago, getting revisions on jobs that are like, 500,000 jobs wrong, over the course of like a year. I mean, in this day and age of technology and data, like I'm just in disbelief that they are just like the data that they're using, and the methods that they're deploying, and the language is just so. And I get it; they have to be careful what they say, to risk moving markets. But I've lost all confidence in Powell, all confidence.
Well, obviously inflation data or any data that they're looking at, any data that anybody looks at, unless you're looking at weekly jobless claims, is going to be in the rear view mirror to some extent, whether it's December or January and so on, or even November. So you have revisions to data which always come in. I mean, time will tell. I mean, I don't think Trump can fire Jerome Powell. And as noted in my commentary today, Jerome Powell yesterday was talking about how he's not going to lower rates just because Donald Trump wants them to be lowered. I do give credit to Besson for talking about longer term rates rather than say overnight Fed funds rates. I thought that was good because mortgage rates track, 5-year, the 7-year, the 10-year. They go out and track that as a spread. I also think, to somebody's credit, that you can lower mortgage rates relative to Treasury rates if you do certain things. And I mean, we're really going way off topic of why Laura's here today, but there's obviously a concern that if and when Fannie Mae and Freddie Mac become privatized, if that's not done very, very well, you have a credit risk out there that grows. So Laura, we're working into credit risk here to some extent. But if you're trying to talk a money manager in a foreign place into buying $500 million of Fannie Mae or Freddie Mac securities, that investor wants some kind of assurance that if things go bad, there's some there. And if they are private companies, having that risk of an investor saying, who's going to stand behind Fannie Mae or Freddie Mac if things go bad, that'll be interesting. So, it certainly seems like we're heading in that direction. I have yet to hear anybody say that privatizing Fannie Mae and Freddie Mac will lead to lower conventional conforming rates. So that'll be see.
Yeah, I wouldn't make them lower, but I think a lot of people, including the former FHFA director, have made the case that, and more importantly, when Scott Bessent talks about it, he was asked about this recently. He said, listen, our number one concern when and if this happens is the impact to mortgage rates. And that will be the number one determining factor on how we move, when we move, what we do. So we'll see. It's, not as simple as that. And, a complex issue, but we'll see how it plays out.
Risk. I mean, as an industry, and Laura, if you want to take notes on what I'm about to say, feel free. But as an industry, we deal with risk all the time, whether it's interest rate risk, market risk, investor risk, government risk, government regulator risk, compliance risk. I mean, the list just goes on and on and on. And so obviously some role plays a critical part with any company in dealing with some of those risks. Just like, I mean, my background, Laura, for your information, I'm a capital markets guy. I mean, you deal with risk every day, both, all kinds of risk that's out there. So all right, Laura, I'm going to plunge you into this conversation. What kind of risk do you deal with on a daily basis? I mean, what's your day like?
Yeah, so the type of risk that an internal audit function particularly at an IMB, at least I'll speak from that perspective, is very kind of generalized. So compliance is always a big part of that, but we also look at operational risk, reputational risk, financial risk, strategic risk. It really just kind of across the board. So a typical audit plan or audit roadmap, so to speak, and kind of strategic map for an internal audit function is going to include truly just risk from across the business. Basically, anything that could get in the way of a company achieving its objectives in every area. So it's fun in that it's, you know, our projects are often kind of varied, and we really get to kind of understand every facet of the organization. The depth is not as much as like a typical, you know, role where, you know, again, I'm not here on behalf of the compliance department, for example, so I can't speak to the same amount of depth as you know, our wonderful leaders in the compliance department could. However, we get to see kind of, you know, a few inches deep, so to speak, of everywhere within the organization. And that's always kind of a fun part of an internal auditor's job at any company.
Do you think people get nervous when they hear you're holding on line 3 for them?
I hope not. You know, so the internal audit as a, you know, as a profession, we sort of have a fun governing body in addition to all of the governing bodies that as lenders we're subject to. The internal audit profession is also governed by what's called the Institute of Internal Auditors, or the IIA. And they have a set of standards that any internal audit function needs to, you know, abide by. And we do. And they, you know, they have really, you know, they just released new set of standards as of January of this year. And they release a lot of guidance, a lot of resources, but all of this to say a lot of the standards and the, you know, the guidance out there, the best practices out there have really kind of modernized from, I would say, what maybe the reputation that an internal audit shop would have had maybe 10 or 20 years ago. Hopefully we are modernizing as a profession. And so really kind of leaning into more collaboration, more transparency, and really leaning into that, you know, advisory and consulting part of our role within the company. What we like to do is typically kind of play an active role and have a seat at the table in more proactive initiatives versus just being there to assess something retroactively and say, oh, well, here's what went wrong. You know, that will, like, the look back will always be a part of an internal audit function's role, but increasingly so we're seeing the IIA kind of set the standards to be encouraging internal auditors to, again, have that active, you know, seat at the table for more proactive initiatives within their companies as well. And that's really where a lot of the value can be had, I think, at any company, particularly for lenders.
So it's almost as if you're the Kathy Kraninger of the company.
Well, I'm not sure I would go down that road, but
well, I know. So you know, the CFPB obviously has been in the news lately, and when you go back and look at the different directors and how they put their personalities on the CFPB, you've got, you know, Richard Cordray on one end, and Kathy Kraninger tends to be the other end of the teeter-totter. She was very much more focused than, say, Richard Cordray on becoming not a consultant, but, you know, receiving input from the industry and not shooting first and asking questions later. And she was very open to input and making things collaborative rather than, you know, just wielding a, you know, her battle axe out there. So somebody I know asked her recently if she'd gotten a call from President Trump asking if she wanted to come back, and she said absolutely not. It's not much of a fun job, I guess. Anyway.
And John McKernan was nominated for the CFP director role. And if I remember correctly, Bob Brokesmith predicted that the last time he was on the show. I'm nearly positive that when we were asking him to speculate on who the appointees were, I think he nailed the McKernan CFPB one, if I'm not mistaken. So
was it John or Jonathan?
Probably Jonathan, but yeah, so he won't accept my LinkedIn connection request, so I'm a little upset at him right now. So, but
I'll give it a shot.
Laura, obviously big news this week with the CFPB, but like more broadly, I want to get your thoughts on, every 4 years we've had the White House kind of switching hands, and with it, our industry, just massive, massive implications as we're seeing right now. And as
Thank you, Jennifer. Jennifer flashed up there.
Jonathan
It's
McCann,
John.
okay, yeah. And yeah, as the head of internal audit for such a large company, like how do you, like I guess prep your team and the company for kind of these seismic changes that you get when the White House and potentially Congress changes?
Yeah, absolutely. Well, first I'll say my opinions are my own. I'm not speaking on behalf of Rate Today necessarily, but in terms of just kind of any change, right? So with respect to the Bureau, we, just like all companies, we always respect the Bureau. We cannot necessarily speculate. We don't have a crystal ball, but we will always, continue to abide and follow the rules and regulations that are put in place. That said, during any time of change, to your point, Rich, to your point, seismic change, certainly there are things that, I would say for any auditors on the call, if there are any auditors on the call or risk professionals, there are definitely things that we can be doing within our companies to help our kind of readiness efforts. So, I mean, first and foremost, stay informed. Obviously, when things are changing at this rapid pace, now is a really good time. And I just had this conversation with my team today to, make sure that we're carving out time to read the newsletters, the Chrisman commentary, make time for those MBA webinars and others. So stay abreast of the changes and stay informed. If internal audit is not already, get aligned with key functions like compliance in this case, certainly, and any other key functions, certainly with executive leadership and the board, just to be sure that things like, executive leadership is being briefed on the changes and their implications to your particular company based on things like what states your company is licensed in, what's your business model, things like that. But also to understand what changes internally are being contemplated or are being planned that can also affect, again, if you're in a risk or audit role, what your roadmap and strategic objectives look like. And then ensure, obviously, all guidelines, so not just at the federal level, but state level as well, based on your company makeup are being considered. Obviously, we all know, examinations have a look back period. So decisions that we make today can be examined a few years from now. And so keep that in mind. And then again, at least from the internal audit perspective, this is actually one area that I feel kind of passionately about is that, consider how you can add value in terms of sort of that foresight of long-term and potentially even unintended impacts of any potential changes being contemplated. So you can consider running risk assessments and scenarios from the internal audit role, help advise your companies on what potential downstream effects may need to be considered. Change management in general, just even from a broad perspective, in my view, is a perfect example of where, I was just kind of speaking to ways that as the internal audit profession modernizes, how we can add more value in a proactive sense to our companies. And I think change management and planning is a perfect example of that, where we can, again, just add value in terms of methodically and even objectively assessing risk and outcomes of different scenarios that may be contemplated during times of change. So those are just kind of a few of the top of mind examples.
Well, Laura, thank you very much for the plug. Right before this call, I was working on tomorrow's opening paragraph. Stay tuned for a link between organic produce and the CFPB in tomorrow's commentary. You heard it here first. So, Laura, if somebody was coming to you, they are thinking about doing what you do, or maybe they just started a new job doing that for a small lender. It sounds like what you just listed off is great advice for them to do on a daily or weekly basis. Does that sum it up?
Yeah, absolutely. And I think, I mean, if you're asking like somebody new to this career, I am not currently, since I just moved out of state, but I previously participated in the local chapter of the Institute of Internal Auditors, where I lived previously in Arizona. And we did a lot of, outreach efforts to like college students and young professionals. And internal audit is cross industry, so it's not necessarily just unique to financial services, but of course, financial services is a big part of that. But I also think, in internal audit, especially, I would say, just being open to change would be kind of a piece of advice to anyone entering this industry as a whole, but especially in this profession. And I always recommend, even within my own team, I always recommend like choose maybe 2 or 3 to start things to become a subject matter expert in, like choose whether it's a regulation or whether it's a subject matter or an area of the business, to just try to learn inside and out and really become a SME in, and be able to add value and be kind of the go-to person, whether it's within your own department, your own branch, your own region, or kind of in a broader sense within your entire company. But I think being a SME is invaluable. And I know I've seen that kind of lead to plenty of opportunities, both within this industry and the profession as a whole.
This is The Big Picture, presented by our friends and partners at Depth, our good friends and partners here at the show, and joined as always by Rob Chrisman and this week's special guest, Rates Senior Vice President of Enterprise Risk and Internal Audit, Laura Schmidt. Laura, you brought up a great point a little bit ago about look-back periods. I remember I was running mortgage lending for a bank when we went from the Obama Cordray, which was a very aggressive CFPB era, into Trump 1.0. And then he brought in Mick Mulvaney, who, remember, he called the CFPB a sick, sad joke like a month before the appointment. So I remember going through this and, just working with our chief risk officer at the bank and, just the stress that nothing can change because of the look back periods, regardless of what your thoughts and feelings are on the regulatory environment going forward. There are look back periods. We did see the Biden CFPB impose penalties on companies on actions that were taken during Trump 1.0. So I bring that up. Just thank you for bringing that up, because it's a good reminder to everybody listening to this that regardless of which way the regulatory winds are blowing, it really doesn't matter, does it? Because you can still be found, liable for things that happen even during different types of regulatory environments.
Was that a question, Rich?
It was a very poorly worded question. It was meant to be a question, Laura. So,
all right. Sorry, Laura, don't worry about it. Sometimes I have to translate for our guests, and when Rich is actually asking a question. There is a question in the question box from Jennifer, and maybe Laura, you can't touch upon this in your capacity at Rate, but Jennifer asks, could we touch upon what Laura believes the impact of the latest announcements for CFPB will do, i.e. benefit or not for lenders in general?
Yeah, I really can't comment on that. And there's still so much to be seen, I would say, in terms of what actually will happen.
Yeah. It's a changing landscape.
Always. So, Laura, how has technology changed the scope of just enterprise risk management, internal audit?
Oh, significantly. I was looking at the data from actually the IIA, the Institute of Internal Auditors here before this. Technology is obviously a huge consideration, both in terms of risk and benefit, right? In terms of risk and reward for any company. I was reading just a little bit ago that so every year the IIA does a global risk survey where they survey different chief risk officers, chief audit officer, audit executives, across the world in terms of where do they rank different risks. And digital disruption, including AI, was ranked last year, I think, at number 6. This year it shot up to number 3, and they expect it to be number 1 or number 2 over the next couple of years. So between AI and just technology as a whole, I think that's increasingly part of our scope and our focus as, you know, as audit professionals. And you know, it's one of those things, AI, what we see in terms of, at least in the internal audit community, is that, you know, there's discussion about AI as sometimes being conflated and used as just kind of a buzzword to explain automation. And so sometimes there's a little bit more, you know, analysis involved to really figure out, is it truly, you know, artificial intelligence, or is it just automation, and what's the difference, and what are the different forms of AI, and things like that. So it's certainly disrupting, or at least kind of catching attention within the audit community, so to speak. And I imagine it will only continue to increasingly do so.
Yeah. So it's the IIA, Institute of Internal Audit.
Auditors, yep. Institute of Internal Auditors, yeah. Yep.
You know, I can only imagine what those conferences are like. You know, they bring in the bull riding machine in the saloon. Anyway,
They get
you
wild.
know, when you, what's that?
Oh, I would jokingly said they get wild, but complete
Oh,
joke.
I bet. Do the snake dance through the lobby of the Radisson. So one of the things that I've become exposed to some extent is when you talk about internal controls, and I'm not asking you to address this. In fact, this isn't even a question. I'm just throwing this out there. But to be able to monitor what your loan officers are posting on social media, or sending in texts or emails. I mean, if you're a large organization like a Wells Fargo, that's got to be really, really difficult um, to stay on top of that. So I'm sure it's a constant issue. And when you talk about technology, I think there are some technology tools that have been brought to bear on, you know, making sure your loan officer population, whether it's 10 or 10,000, is compliant and you know, minding their P's and Q's. So, all right,
Yes.
that's all I wanted to say.
Yeah, we had another question come in the chat. Our good friend Bernard from iEmergent, great company. As a concerned data nerd here, does Laura think lenders will still have to submit their 2024 LAR? Will the CFPB or whomever release 2024 HMDA data by the end of March 2025? Any insight whatsoever there, Laura?
I have no insight. I cannot comment on that. Do either of you have any intel?
I mean, I think that lenders will still have to submit a LAR, would be my guess. And somebody from the Trump organization made a comment this week about the CFPB, just saying, like, listen, all essential, you know, tasks are going to continue to be performed. My guess is they want the data too. I mean, that's powerful data. Maybe Jerome Powell, you know, can take a clue from that and maybe start getting some better data. But you know, so I think from that perspective alone, I'd be shocked beyond belief if there's any changes with the LAR or HMDA data, just because that is very valuable information for people trying to manage real estate finance in America or whatever. So, but
One would hope that information would be useful to the government
you would
and to
hope.
the industry.
You would hope. You would hope. So, and Jennifer McGinnis notes in the chat, the deadline for the LAR is March 1. There's no way they're going to change anything that fast. So yeah, great point by Jennifer there. So
I don't know. Change can happen pretty quickly.
it can. So, Laura, any trends emerging in the world of, you know, just mortgage lending, risk, audit that of note that you know, lenders should be aware of?
You know, it's interesting so one of the activities that most, if not all, internal audit functions perform is at least an annual basis. We perform an enterprise-wide risk assessment. So we go around, we talk with leaders of all of the key functions within the enterprise, and we do kind of a pulse check of state of risk and controls within the organization. And the short answer to that question, I would say the way I can answer that in the least long-winded way possible is that pretty much whatever is important to the business is important to audit, right? Whatever is important in keeping your capital markets team up at night, or your QC function up at night, compliance function up at night. Those are the same things that are landing kind of top of mind for your audit role as well, typically, even just from a monitoring perspective and kind of keeping the pulse on things. So, of course, the last couple of years in our industry, there's been plenty of news about obviously like just the market risk in terms of rates and cost cutting measures, and continued, loan quality focuses, compliance as always. And then, as you mentioned, technology. Those are all things I think that, they've been for some time, a huge focus on our area. From the audit perspective, and I think will continue to be. The angle from which we assess them may evolve as we, all companies have to continue to innovate and just ensure that we are staying with the times, we're staying compliant. But really the focus kind of remains business as usual to some extent.
What was the risk rating assessed for coming on the big picture? Is it a high risk maneuver?
That is a high risk activity. I'm surprised Laura's not wearing a helmet. There's so much risk here.
Well, as always, the time jets by here on the big picture, and but we want to thank Laura Schmidt, the SVP Enterprise Risk and Internal Audit for Rate, for joining us this afternoon. Laura, thank you so much for providing your insight for our listeners and coming on the show with us today.
Thank you so much for having me. It was a pleasure.
And thank you very much to Depth.
And thanks to our friends at Depth for sponsoring and supporting the show, and to all of you that have joined in on the live version here. Of course, this goes right to podcast and YouTube as soon as we conclude the show. But if you're listening on one of those mediums, join the live show. It's live on Zoom every Thursday at 3 p.m. Eastern, and you can go to CrismanCommentary.com to get registered for that. So,
and Rich, I will work on hooking you and Jonathan up.
Thank you. Yeah, I know. It's I'd love to chat them up. So, but well, good stuff, and we'll see you guys next Thursday at 3 p.m. Eastern. Have a great rest of the week and weekend, everyone, and we'll see you next week. Take care, everyone. Thanks, Laura.
Thank
Thanks,
you.
Laura. Thanks, Depth.